Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. In this edition, big news on world banking regulations from the Basel Committee. What's it mean for us? Counting up the costs. The fallout continues from New Zealand's largest natural financial disaster, the Canterbury quake. And Beef and Lamb New Zealand's new season outlook looks good, but what about that exchange rate? All this and much, much more coming up. But first, joining us now to talk markets around the world is ASB Rural economist James Shortall. James, thanks for being with us.
Always good to be here.
I hope so. Now tell me, let's go over to the Basel Committee. New rules for the world banks. What's it all about?
Basically, the Basel Committee, then they sort of decide on what the proposed regulations will be for the global banking sector. The different countries then can go to their regulatory authorities and decide exactly what they want to do and whether they are going to impose those same regulations. But, you know, I guess in a lot of instances, the superpowers of the world decide on these, so a lot of countries sort of fall into line.
Now, this affects something like 30 countries. We don't actually have a seat at the table, if you like, but we're represented under Australia, correct?
That's right. I mean, the major trading banks here in New Zealand are Australian-owned, so we sort of fall under the Australian banner, and they fall under the Basel Committee. So any changes that do happen, then they do have an impact on us here in New Zealand as well as other places around the world.
And basically, the regulations are being firmed up, if you like. What's it going to mean for banks?
Well, the regulations, there's been a lot of talk over the past 2 years out of the global financial crisis that there does need to be some changes. Banks need to tighten up, perhaps more directed at the European and the US banks as opposed to the Australian and New Zealand banks, because we've come out of the global financial crisis pretty well. But, you know, the US banks, and they are sort of looking at their proprietary trading, their share trading, currency trading, derivatives, what they hold on their balance sheet, whether they actually hold enough cash on hand to withstand these sort of pressures, whether they hold enough capital. So the changes that have been proposed are really to take into account some of those factors that have come up through the financial crisis, and some of the regulations. The main ones are that they want banks to hold more capital, and they've given them a good time frame to allow them to do that. Good
time frame, but some of the critics are saying, what is it, 8 years they've got to come up with this? It's not soon enough. What do you think?
Yeah, well, initially there's a 5-year banner, and then there's some further regulations that will come in sort of around 2019. I guess the risk is that you know, we get into a different economic swing over the next 5 to 10 years, because that's really what we're talking about. And you know, they get pushed back on the back burner, and the reason that they have come to the forefront, and they've come to the forefront now, is because there's been a lot of hype over the past 2 years that the changes are required to ensure that we don't go through this again. So I guess we just have to make sure that you know, the momentum continues, and you know, as we go through you know, another economic cycle and a bit of a boost, then they still get implemented.
A lot of the experts now are watching what's going on with the Irish banks. Why should we care?
Well, I guess one, because they're some of our ancestors.
Yeah,
so
I suppose
always care what's happening in Ireland. But
Shortall doesn't sound like an Irish name to me.
Oh, it is. there's some blood back there. But you know, I guess the big reason is you know, the Irish have a big impact on the European banking situation, on global markets, on the European economy. So the situation for the Irish banks is having an impact on their economy, on their government finances. The Europeans are worried about it. And, you know, they're keeping a close eye on it.
The Chinese economy, meantime, continues to rocket away. What's the latest from there?
Yeah, the Chinese data was out over the weekend, and it was really positive. So there's been a bit of scepticism about what is happening in China, and there's a bit of a slowdown, that sort of thing. I mean, as I've said before, then the Chinese were growing at over, you know, sort of 12% earlier on in the year. They might slow down to under 10%, but still going to be a huge amount of growth. And the data out over the weekend sort of showed that their production's going well.
Up
retail
14%.
Sales,
can you imagine?
That's right, and retail sales are sort of over 18%, and they've done all of this while still keeping sort of inflationary pressures under control. So that's been the big worry. You know, if inflation's getting out of control, then need to start increasing interest rates, that sort of thing, and sort of pulling back on the economy. But you know, there's a lot of activity going on, and still not seeing those pressures, so that's good.
How's our dollar doing against the greenback?
Well, it depends on how you look at it. We've been increasing, so it's not good for the agricultural sector. But global markets, equity markets have been up. There's been a few things that have gone on over the past week. The Chinese information has seemed to be good for the Australian economy, and of course for New Zealand, because China is becoming very important for the New Zealand economy now. So that's been positive for the dollar. But also last week, Australian unemployment, then that came through, and that gave the Australian economy and their currency a boost, and we got dragged along with it. So, we're actually trading, the highest we have been in a good while now. We're currently trading 73.70 against the US dollar. So that's the top of the range.
How are we doing against the euro and the pound?
The euro, we have also been, the talk has been about the banking situation. Irish banks last week, the government having to come in and sort of do some restructuring. So there's been a bit of talk about what's happening with the stress test and concerns about whether that was actually stringent enough. And there's been a bit more concern about the Europeans. That has actually seen the euro fall against most major currencies, including us. We were well over 57 against the euro, and on Wednesday we're actually just a touch under that. Against the pound, then we're also up. We're sort of well over 47.5.
Global dairy trade auction coming up. What are you picking?
Well, I mean, last month I was very surprised to see the spike up.
Sensational.
It's just 2 weeks ago where we're going to see every auction now every 2 months. So I would be surprised to see so much volatility as what we have over the past few months. But I think what we have seen is that New Zealand prices and Oceania prices are now a bit more into line with what the Europeans are doing. So I wouldn't be surprised to see a bit more stability. But there's been so much volatility that who knows.
Thanks, James. Coming up after the break, how will the government's new emergency legislation help in the recovery of the Canterbury quake? And 2 more of Alan Hubbard's charities are sent to statutory management. What's this mean for long-term investor confidence? But first, a question for you in our Farmers' Facts and Figures quiz. What was the largest rural loan made by South Canterbury Finance? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what was the largest rural loan made by South Canterbury Finance? The answer, $68.5 million to South Island Farm Holdings. More on that soon. But first, with the Reserve Bank Governor poised to make another official cash rate announcement on Thursday, time to talk to the experts. Joining us now is Murray Weatherston, Principal of Financial Focus. Murray, what are you picking Alan Bollard will do?
Well, my pick is he'll actually increase the rate again. Really, he's on the way to increase it to 4.5% or 5% over time, and I don't see any real reason for stopping and pausing at this point in time.
60% of economists wouldn't agree. Is that true, James?
Yeah, I think most economists are predicting that there's going to be no change. I guess the reason being for that is that there's been a bit of a slowdown in the global economic activity and a bit of a slowdown in some of the data that's been coming through here in New Zealand. And so the risk is probably more weighted towards, potentially just, raising it too much too soon and choking off an economic recovery, as opposed to, leaving it on hold and seeing the risk of inflationary pressures. So some of the data has indicated that inflationary pressures have eased back a little bit more than perhaps what they were initially thinking.
But Murray, won't Alan Bollard also be thinking about next month the introduction of GST, that going up higher, the introduction of ETS, ACC? All of that is going to have an effect, isn't it?
While that may have an effect on inflation, he's allowed to look through those, government charges. And so he won't be worried about the GST increase in itself. What he would be worried about is if the GST increase promoted wage increases that caused costs to, increase, and it just followed through. So, I don't think he'd be worried about it at this point in time. But I do think the big point is it's not really what he does tomorrow with the rate. It is on the way to 4.5% or 5%. It's just a matter of when it happens.
Okay. We have a new super regulator now. Legislation just went through yesterday under Simon Power. What does this mean to investors like me and you?
Well, probably it won't make very much difference at all. there's been a lot of complaints in the last 2 or 3 years as we've had financial companies falling over, that the regulators haven't taken enough positive action to sort of stop it. One of the answers that Jane Diplock gave when she was criticised about not taking any action, she said that they actually lacked enforcement powers. And when they put all the regulatory things that currently the Securities Commission, the Ministry of Economic Development and the Stock Exchange, when you put it all together in one regulator and you give them some powers for enforcement, perhaps things will change. But maybe we never get back to a situation where it's actually needed.
Okay, from the super regulator powers to emergency powers passed now by the government yesterday to take care of rebuilding after the earthquake. James, what are you hearing about the latest figures coming out about how much destruction there's been down there economically?
Well, last week when we were talking, then the initial estimates were around $2 billion.
Correct.
Now it's up to $4 billion from the Treasury. There's going to be a massive rebuilding phase, and probably over the next few months, and there's going to be a lot of assessing of what that's going to mean. But we can't lose sight that there's been a lot of wealth destroyed through this whole thing, and it's going to take time to rebuild that. And there's going to be muted sort of economic activity, but people of course are going to have to get out. Buy furniture, buy things that have been destroyed through the earthquake, and that's going to take time for that to happen, but there will be a bit of an increase in economic activity.
Murray, the Prime Minister is calling it the largest natural financial disaster this country has ever seen. Would you agree?
Well, look, it may be in nominal terms, but I'd actually like to see what the numbers say for the Napier earthquake in 1931 were. $4 billion is a big number, but my pick is that the damage in Napier was probably greater.
The thing is, too, we're throwing all these numbers around, but we still don't have any hard facts and figures on, for example, water and infrastructure damage, particularly to our farmers. What are you hearing, Murray?
Well, I think the answer is nobody really knows, and it's only going to be over time when farms get affected or don't get affected, as the case may be. We can see damage above the ground. We've got no real idea of what happens below the ground.
And we've already had, 300 aftershocks, and it ain't over yet.
Yeah, but I think the good thing about that, though, is the scientists seem to suggest that the big one comes early and that the aftershocks, diminish in size over time. So, if things follow the normal pattern, there won't be a bigger one than 7.1 as an aftershock. I mean, the biggest aftershock is 5.1, as I understand. That's about 1/1000th of the size of the big 7.11. The scale is amazing, and so long as there's no really big aftershock, perhaps the worst of the damage has been done.
The water situation in Canterbury, of course, is a nightmare anyways. How do you think this is going to add on to the economic woes they have from that point of view, James?
Yeah, I think that's a big question mark at the moment, because if there are some serious damage to irrigation schemes, to irrigators in general, the infrastructure, to bores, that sort of thing, then that's going to have longer term impacts. And if you can't get the machinery in, it's not sitting around. So if it's it's going to take time for that to come through. And initially my reaction was, well, businesses have got back on their feet, farmers are milking the cows pretty quickly, but they can only do that in their neighbour's shed for so long, and then there's going to be a decrease in production. So when we get into the summer months, that's when irrigators are going to be needed. We may not see the full effects of this for another few months just yet.
Any good civil engineer, of course, will tell you, James and Murray, that it's stuff you don't see that, of course, is the big danger. And I wonder if the government, wanting to take a leadership position, isn't giving us perhaps a false sense of security of what the economic fallout is really going to be. Your thoughts, Murray?
Well, I think what their first job is to calm everybody down. If everybody was running around, hugely panicked, that would be even more disastrous than what the current situation is. And I think that, what they have been doing is to try to, do the best that they can, calm everyone down. I actually think that's the right approach.
Okay, what's it going to mean for all of our